right? So the type of trader you are will determine how you construct your key level. Now, what traders need to understand is there are 5 trading methodology, right? When it comes to trading methodology, this is what I meant as trading methodology. Let me just put this here a little bit. Now, there are 5 trading methodology. 5 trading methodology, right? So let's put this to be bolder, right? There are 5 trading methodologies. This plural, methodologies. Yes, methodology. We see, I have to correct this. Methodology. Yes, I know I was wrong. 5 trading methodology. Now, this methodology is based on the type of trader you are. So in the market, we have 5 different types of traders. We have the 1 position trader, right? And the 2, we have the swing trader, right? And the 3, we have the day trader, and the 4, we have the scalp trader, right? And the 5, we have the news trader, right? So these are the 5 different trading methodology. So you as a trader, you must fall under one of these trading methodology. As a trader, you have to fall under one out of this trading methodology. Let's change the color of this. You must fall under one of this trading methodology, right? Now that you have understood what trading methodology is all about, it is time we now proceed to explain more about these 5 trading methodology before we now move on to how we construct key levels in the market. Now, who is a position trader? Let's talk about a position trader. A position trader, that is an individual whose primary key time frame is the monthly chart, right? So we have the monthly chart. I'm going to use the capital letter M to represent month, and he or she analyzes his chart all the way down to the weekly chart. We are going to use capital letter W. So he or she analyzes his chart to the weekly chart, and later he analyzes to the day chart, and his entry is being made on the day chart. So the entry of a position trader will be made on the what? On the day chart. Good. Now let's go to the swing trader. In the case of the swing trader will start his or her analysis from the what? From their weekly chart. And then from the weekly chart all the way to the day chart. Please mute your mic. And from the day chart all the way to the 4-hour. That is a swing trader. Right? You can see that a swing trader will start his analysis from the weekly chart to the day chart to the 4-hour chart. Right? Now, let's navigate further to more. And the next right here is we have the day trader. The day trader, just as the name implies, he or she will start his analysis from the day chart, and from the day chart to the 4-hour chart, from the 4-hour chart all the way to the 1-hour chart. That is the day trader. Now, for the scalper, a scalper will start his or her analysis from the what? From the 4-hour chart and progress all the way to the 1-hour chart, and then progress all the way to the 15 minutes chart, right? So that is what we have. Now, in the case of the news trader, news trading is complicated, right? It is complicated, right? Normally, the news trader will start their analysis based on fundamental factors from the 1-hour chart, because it is best to blend technical with fundamental. In a situation whereby fundamental is different from technical, you have to be very careful of whatever you want to do, right? So we have 1 hour, and then they switch to the 30 minutes chart, and then on they will go to the what? To the 15 minutes chart, right? So that is what we have. Now, based on what we have right here, these are the trading methodology you as a trader you need to understand. So you need to fall under any of these 5 before you can trade. As a trader, it's either you are a position trader, or a swing trader, or a day trader, or a scalper, or a news trader. Now, for us to be able to construct our key levels, our support and resistance, or demand and supply, we need to understand our trading methodology, right? Now, in this class, I am going to show you how you should construct your key levels right from the monthly chart all the way to the 15 minutes chart. So we all know right now, the position trader will start their time frame from the what? From the monthly chart. And the swing trader will start from what? From the weekly chart. Day trader will start from the day chart. Scalper start from the 4-hour chart. And the news trader start from the what? From the 1-hour chart. You can see that? Good. Now that we have known the time frame which correlates to our trading methodology, it is now easier for us to decide the time frame we should start our analysis from. Okay, now what we are going to do on this price now is we have to eliminate all the drawings right here. So what I'm going to do is I think I can copy this. Okay, I can copy this somewhere, so in case we need it, I will just get it back, right? Okay. Now I can delete this. I need to delete this so that we can start everything we want to talk. Now let's put our
still copying. Good evening.
Yeah, good evening. Please mute your mic. Right?
I'm still writing. I was writing before you.
Okay. I will show you once again now. Now this is it right here. Okay, so you guys can take your time and write it. Just write it. Once you are done, you let me know, right? And for those of the new students in the class, you are welcome. We have a lot of students today. Thank you, Ogunride. Thank you, Chuku. Thank you, Kayode. Thank you, Pius John. Thank you, Kike Lomo. Thank you, Drelo. Thank you, Akunke Lumi. Thank you, Umewa. Thank you, Joseph. Thank you, Mr. Dinaka. Thank you, Fioluwa. Thank you, Amzat. Thank you, Ayo FS. We have lots more of traders in the class tonight. Wow, that is wonderful. That is great. And thank you, traders on YouTube. Thank you, the Forest Trader 001. Thank you. Thank you. Right. Thank you. So once we are done writing down the information on the screen, please let me know so that I can proceed further, right? Thank you, Adepoju Grace. Thank you, traders. Thank you, you're welcome. These are the 5 trading methodology. Methodology explains what type of trader are you. The type of trader you are will determine the time frame you have to construct your key levels, right? The type of trader you are determines the time frame you have to construct your key level, because most of the time traders ask me, especially beginners traders, struggling trader, they ask these questions: what is the best time frame to construct key levels? What is Thank you, Alestra. What is the best time frame to construct key level? That is the question being asked by traders mostly all the time, especially when traders visit me in my trading floor. Now, in order to give the suitable perfect answer to this question, this is why we have to explain this concept right there. So now you have to choose between these 5 trading methodologies. If you are a position trader, you start your key level from the monthly chart all the way to the weekly chart and the day chart. If you are a swing trader, you start your key level from the weekly to the day to the 4 hour. And as a day trader, you start your key level from the day to the 4 hour to the 1 hour. As a scalper, you start your day chart, your primary key time frame from the 4 hour to the 1 hour to the 15-minute chart. And as a news trader, you start from the 1 hour to 30 minutes and 15-minute chart. But please remain the rule of construction of key levels. The rule states that the day chart is the universal chart. The day chart is the universal chart. Thank you, those who are just joining us, Yabo Ojo. The day chart is the universal chart. Universal, right? When something is universal, it means it is applicable to all other things else, right? It is applicable to all other things. Let's just copy it and paste it right here. So are we done? Are we done writing, putting down the information on the screen so that we can proceed to the next section? Are we all done?
Yes.
All right, thank you.
True, yeah.
All right. So, do we have any traders still writing this down? Can we proceed? Can we erase it? Thank you. Now let's get it off. Now the topic for today is trading methodology, right? Now let's get this off and let's put our chart to auto mode. Now let's take for instance I open my price chart. The first time when I open my price chart, this is what you need to have on your price chart as a beginner trader. This is how your chart should look like as an experienced trader. This is how your chart should look like as a trader. Please mute your mic if you are joining us for the first time. This is how your chart should look like. Okay, so whenever I open my chart, I must not see any obstruction on the price chart. Thank you, those who are just joining us. I must not find anything on the price chart. I must ensure I have a clean chart, right? Let me go through some of the lists right here. I think some people are trying to ask questions. There are a lot of traders right here. I'm just trying to. All right, thank you everyone. Wow, we are a lot of students in the class tonight. Wow, that is great. That's great. Thank you everyone. Thank you. Wow, this is wonderful tonight. Thank you. And more people are still joining us. Thank you. All right, now let's get back to the price chart. I think someone was asking a question. Now let's get back to our chart. Now based on what I have right here, this is the what? This is the monthly chart. So now let's say for instance I'm a position trader and I want to construct my key level. The time frame I have to start from the monthly chart to the weekly chart to the day chart. Now this is what I need to do. Once I have open my price chart, I have a clean chart. As a position trader, I move to the monthly chart. Now I zoom in. I first zoom out on my price chart. Zooming out on the price chart, I can see price transformation within a wide range of period or within a long time period. Right now I zoom in on the price chart, and once I zoom in on the price chart, I look out for major swings levels in the market. I look out for swings in the market. On this price chart, on the monthly chart, these are the major swings in this market. We have the major swings right here. That was August 14, March of 14, August 2014. I mean 2014. Yeah, I think that was 10 years ago. Yeah, wow, 10 years ago. And then we have the same level rejecting price. That was in April 2021. And this level failed to hold price in the August 2023 and March 2024. It means this level became inactive within 2023 and the 2024, right? So as a position trader, you necessarily don't need to mark this level here, because once this level failed to hold price and the price traveled through it, price travel it series of times, then this level becomes inactive. So we have to ignore that zone. Right now, let's move on. Now zoom in properly on our price chart. Now on this price chart, I will show you how I got the trade setup on USD Swiss. We took a trade setup on USD Swiss. Now I went to the highest time frame, the monthly chart, and I started constructing my key level from the monthly chart. So on the monthly chart, I can see that last month, the month of September, got a rejection at a previous support or demand. Please traders, before we move on with this class, there's something I need to explain, because there is this misconception among traders, and this is all about support, resistance, and demand and supply. So first, let's talk about this demand supply, because some traders do mix things up. First thing, we have a resistance. Resistance is a level which tends to attract more sellers. Resistance is like the ceiling of a building, right? That is the basic explanation. Resistance is like the ceiling above you. That is the basic explanation. And then at resistance, majority of traders look out to short, to sell. Majority of traders look out to short, to sell, right? Now, at the resistance, traders are looking out to do what? To sell. Now, the question is, at the supply level, what are traders interested to do at the supply level? Traders are also interested to what? To sell. So, resistance and the supply, they all refer to the same technical implication, which is to sell, right? Now, we have sell. Resistance slash supply, they all have this implication of what? Of sell. Now, the same thing at the support, we have support. The opposite of resistance is support. Support is like the floor of a building, a structure you stand on, right? Now, support, what are traders interested to do? What are the interests of traders at support? Traders are interested to buy from support. And what is the interest of traders at a demand zone? Traders are interested to buy. Now, most traders have this misconception that support and resistance is different. Demand and this is that is different. Demand, supply is the best. Resistance and support is weak, is this, is that. Do not get yourself confused. All these funny names, demand, supply, liquidity, this, blah, blah, imbalance, FGB, whatever, BB, BlackBerry, iPhone, or whatever they call it, Corona, whatever. All these are just coined names. All these are just names given to each of these price actions in the market. These are personal names. You can decide to call your support a different name. You can decide to call your support a green level. You can decide to call your demand elephant structure. Whatever you want to call it, it's your own business. Just understand the technical implication of what we have at support, demand, or whatever, resistance, supply, whatever you want to call it. Just understand the technical implication. That is what really matters. Okay? So don't be confused with these funny names: supply, demand, resistance, liquidity, no show, whatever, blah, 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 blah. All right? Just keep it simple. All right? So support and resistance, I'm going to show you how you can apply it on your price chart. Okay? And the demand and supply, there's a way you can as well apply it, but they all mean the same thing, right? So the way I use my demand and supply, I use demand and supplies on the lower time frame, and I use support and resistance on the higher time frame. Also, something you need to understand about support and resistance is support and resistance, whenever price get to its resistance structure, technically price should bounce out of that zone instantly. Likewise, whenever price bounce to a support level, price should bounce out of that level instantly. But at a demand zone, price can travel into a demand zone and still do what? And still spend some time at that demand zone before creating a liquidity to the upside, right? And on the supply zone, price can travel to a supply zone and still navigate, still dance at that medium before it start going all the way down. So that is just a slight difference between support and resistance. So it means support and resistance are to be constructed on the higher time frame, and demand and supply on the lower structures or on the lower time frame. Now, as a trader on this price chart, based on what we have on the monthly chart, for me to use my rectangular tool to represent demand in this market doesn't really make sense, because if I should use my rectangular tool right here on the monthly chart, moving on to the lower time frame, you are going to see every areas on my chart is showing me what? Demand, demand, demand. Now this chart become dirty. This chart become what? Dirty, dirty, right? So this is why I can say right now on the 4-hour chart, you can only see what? A gray background. You can't see the normal background of the chart again. You are now having a gray background. So this is why you need to understand how to keep your chart simple and clean, right? Now let's wipe this out. So instead of using the rectangular tool for demand, and take note, I use the rectangular tool for demand or supply. So whenever you see my chart, or whenever you're watching any of my video or my analysis and you see rectangular tools or rectangular shapes on my chart, rectangulars means demand supplies on the lower time frame, right? Whereas my horizontal lines, which are in red or orange color, means support and resistance. So support and resistance, I treat them more important, very, very important. These are levels that rejected price on the highest time frame, like the monthly and the weekly chart, whereby you will see my supply demand on the lower time frame, like the day chart, 4-hour, and all the way down, right? Now let's say, for instance, I want to mark the key level structures in this market. Take note, key level structures also mean support, resistance, right? Demand, supply, key levels, right? That is the definition. We have it as key level, key and level, that is the name. Key levels, key levels. So this is the spelling right here for beginners trader. Key level. Do not mind my writing. I'm not operating with my desktop Windows computer today. I'm operating on my MacBook, so I'm not a fan of using my my palm or my mouse, right? I'm trying to get a mouse for my MacBook, right? So key levels, right? So they all mean support, resistance, demand, supply, whatever you want to call them. It's your own personal choice. Just understand what they mean or what the technical implication they have on the price chart. Now, based on what we have right here, the best way for me to construct the point of interest for the buyers in this market is to use my horizontal line. Of course, I know at this level, whenever price travel to this level, we always have people buying from this level. These are buyers taking the price to the upside. Buyers are taking the price to the upside. So at demand, people want to buy. At support, people want to buy. So why get yourself confused and start asking yourself, should I construct demand? Should I construct support? Whatever. No, they are all the same meaning, right? Now, I will use the horizontal line now to capture the low of last month. Last month is what? September. Once I capture the low of last month, I know that is the extremity of last month. Now, I pull my horizontal line to the left hand side so that I can capture the previous price actions in the market. Now you can see that. Now I know I have what? A key levels, a support, a major support on this price chart. So whenever I navigate to the weekly chart or day chart, this red line will tell me, hey, take note trader, take note trader, guy, take note. This level right here, it's a level which has been acting more than a year ago, or 2 years, or 5 or 10 or 20 years ago. So this is showing me this is a red zone. This is a danger zone, right? It's a powerful zone. You have to be very careful. All right. Now let's go back to the monthly chart. Now, once I have my key level constructed on this level right here, I can go ahead again and construct another key level at the swing size in this market. I have a swing size in this market. You can see that at this level, traders sold all the way down. We sold all the way down. At this level, we bought all the way up. Now, currently, we are buying all the way up. And one of the reasons I sent out to trading signals in the community is that we should buy the USD paired against the Swiss. And those who bought, they are currently smiling to the bank right now. And those who came to my physical class, I showed them what I was doing. I told them I had multiple entries and I'm playing safe, right? Now, once I mark these key levels right here, I know that, okay, this is my support. And again, at the extremity, at the eye, I have a key level resistance. I have a key level resistance above. Now, this is a key level resistance above. You can see that. Now, this means price has been traveling within this range medium right from September 2023. Price has been bouncing through this medium, and this is what, September 2024. So this means we have been traveling through this range for a year, and based on the law of trend duration, take note traders, do not mix up things. We have trend direction and trend duration. Now, what is trend direction? Trend direction is the movement of path in which market approach to achieve its objectives. Now, in the simplest definition, trend direction, we have upward move or uptrend market, we have sideways market, right, and we have downtrend market. So this is an example of trend direction. Trend direction is different from trend duration. Now let's say, for instance, from this uptrend market, ask your questions, please.
Please come again with the definition of trend direction.
I said trend direction is the path price navigates to achieve its objective, to achieve the direction, to achieve a specific direction. You can just say trend direction is the path price navigates to achieve its what? Direction. Right? When we say direction, it means where is price going? Is it going up? Is it going sideways? Is it going down? Right? It's a path in which market flow to get to a specific location. So you can use different definition, but it's better you understand the concept, not about cramming, right? Trend is a path which price flow, right? It's a path, it's a flow, it's a structure whereby price navigates, price travels. It's like a journey. Price travels, price can travel up, price can travel in a sideways, price can travel in a downtrend. So it's a structural path, it's a structural movement at a specific direction, right? So that is it. So just understand, trend direction deals with uptrend, sideways, and downtrend. Simple as that. You don't need to cram anything, right? We are not here to sit down for an English class or for a physics or mathematical class or engineering class. We are here to trade and make money. So we have to present things in a simple format that a layman will find it easy to understand. Okay, now based on what we have right here, we have from this level right from September 2023 to this level right here, September 2024. What we have right here, we have a trend direction to the downside, and then on January 2024 we have a trend direction to the upside. On May 2024 we started having a trend direction to the downside, and in October 2024 we are currently having a sentiment of trend movement to the upside. Now this is trend direction, but the movement we have from point A to point B is what we call trend duration. So trend duration deals with period, time cycles. Trend duration deals with time, period. How long did the trend move? How long did the trend move? Right? That is the time it takes for price to achieve its movement, right? So that is trend duration. So from this point A to point B, it took price a year. This is September 2023 at point A. Point B is September 2024. So it took price a good year to travel from this high to this low. And then based on the principles of trend duration, any trend that elapses more than the 12-month calendar period is called a long-term trend or major trend. A long-term trend. So we need to understand that concept. Any trend that elapses the calendar of 12 months is what we call a long-term trend. Long-term trend, or you can call it major trend, right? any trend which is more than a 12-month calendar period, or a movement which is above the annual cycle, is what we call the major trend or the long-term trend, right? Now, let's wipe this off. Now, let's navigate once here again. At this September of 2023, we have point A, and to the low of point B, which was what? December 2023. December 2023 from September, that is around 3 months. October, November, December, that is 3 months. So from point A to point B is a short-term trend. Short-term trend. Any trend within the 3-month calendar is regarded as a short-term trend. Any trend within the 3-month calendar is a short-term trend. We have the short-term trend. Short-term trend. Short-term trend. Right? That is what we have, what we call trend movement within the 3-month cycles. Right? Now, from point B, we rallied all the way to what? To point C. At point C, this point C tagged 1st of May 2024. So December and January 4 months, February 5 months, and March 6 months, and April 7th month. Right, yes, we got to this peak within 7 months. So any cycle or any period, any trend duration which elapses more than 3 months, which is above 3 months. Above 3 months is what? Is intermediate trend. Any trend above the 3 months is what we call the intermediate trend. Intermediate trend. And another wonderful name it is called is speculative trend. Speculative trend, right? Speculative trend. These names were being tagged or were being taught based on the pioneers of technical analysis, Robert Schumacher. Robert Schumacher. These are the grandfather of technical analysis. The man who wrote the Bible of technical analysis, stock market analysis, right? Speculative trend. The reason why this trend was called a speculative trend is because it is easier to make money when trading with the speculative trend. Unlike the short-term trend, only the nimble trader, the faster trader, the extra smart genius traders can make money in the short-term trend, and the profit right here doesn't move too much. The profit right here doesn't last long. But when it comes to speculative, it's very, very reliable, right? It is the intermediary between the short-term trend and the long-term trend. So if we are talking about the speculative trend, one of the time frame you can check this out is your weekly chart, and that is why you see the weekly chart is a very powerful chart, and the day chart houses the short-term trend, right? And the monthly chart houses what? The long-term trend or major trend, right? Now, based on what we have from point A to point B, we have a short-term trend, right? That is within 3-month calendar. And from point B to C, that is 7-month calendar, which is more than the 3 months. That is now the speculative trend, right? And then from speculative C to point D, which is the September 2024 last month, this is now what? A major trend. It's now more than a 12-month calendar period. That is a major trend or a long-term trend, right? So this is an investment calendar business cycle, right? Now let's wipe out everything right here. Let's wipe out everything right here. Now we have our what? Our support at the low. That is the price of the 0.83699. That is our support. And then our key level resistance at the level of the what? Of the 0.9218. You can see I ensure that price is what? Staying at the high and lows. In our beginners class, we discussed what makes the candlestick on the price chart. Now it is time we start implementing what we've learned so far on candlesticks. You know something about candlestick is the highs and lows of candlestick are very important when it comes to marking support and resistance. It's very important. But in the aspect of demand and supply deals with bodies of candlesticks. Demand and supply deals with what? Bodies of candlesticks. And that is why I told you in the beginning, I prefer the body of my candlestick to be marked on the lower time frame, and the highs and lows of my candlestick to be marked on the higher time frame, such as the monthly chart to the weekly chart to the day chart. And from the 4-hour chart all the way down, I prefer the bodies to be marked. Right now, the reason why I prefer to use the highs and lows of candlestick on the higher time frame is based on the time circles, the period, that is the trend duration, right? The 4-hour or the intraday chart are short-term trend. So short-term trend, I prefer having them in rectangular boxes, and the intermediate time trend, which start from the weekly, the day, no, it's still okay with the horizontal line, but there are some times whereby I would prefer to differentiate, which means, okay, let's go to the weekly chart so that you can see, so that it doesn't look like I'm just putting down theories right here. Now let's go to the weekly chart and see what I mean on the weekly chart. Now on the weekly chart, I can see now that these levels are far away from one another, moving to the lower time frame. So it means at this extremity right here, it's a danger zone, and this danger zone is warning me that these levels are levels that tend to attract long-term investors, major trend movers. So whenever price bounces to this level, you have to be very careful. You can't compare the types of forces or the strong technicalities right here to your demand and supply. No, these are important, very strong level. If you were to use a demand structure right here in this market, you would have loved to apply your demand this way like this. But this makes your price too dirty. It becomes too dirty and then filled up with a lot of obstacles, right? I like a clean chart. When you keep it simple, it is easier for you to make decisions. But when you have too much drawings on your chart, making decisions become difficult for you when the times comes, right? Now, everyone loves this chart right here. It's a clean chart, easy to understand. Now, let's mark my intermediate structures. I will mark my intermediate structure from the weekly chart. Remember, the intermediate we start is within the within 12-month calendar, and the long-term trend and the major is above 12-month calendar. Please don't miss it. Don't miss up things. Now, I will mark my intermediate trend based on the highs. You can see the highs, but this time around, I have to dissociate between the major levels and the intermediate levels. Now, what I need to do is to change the color of this orange color to a different color, so that whenever I'm going to my chart, I can easily identify major levels and intermediate levels. Now you can see I change this color to black. You can prefer to change yours to blue. If you prefer the blue, that is okay, but I prefer the black. You can change yours to any color of choice. You can change the red lines to any color of choice. Just know what what each colors or horizontal lines or signify on your price chart. That is what really matters, right? So we look out for more levels in this market. There are a lot of levels. Okay, this is the only level. Okay, we have another swings highs in this market. I can mark this level right here as a swings highs, but I can let some levels be marked right here, right? So I have another intermediate zones at this level. Can see that intermediate zones taken out. Now my chart is getting more easy to analyze. Now I have my major levels, I have my intermediate levels. Now the next thing I want to do right now is I have to move to the day chart. Now the day chart, I will start looking out for what? The short-term levels. Now based on the day chart, I can now use my rectangular tool to mark demand and supply. So one of the ways I mark my demand and supply is to use the body of candlestick. That is the last candlestick that made the reversal to the downside, or the last candlestick that made the reversal to the upside. Now in this market on the day chart, Where are the candlesticks that gave us this bearish swing, and bearish swing? The candlesticks which gave us our bearish swing, our short-term bearish swing, and short-term bearish swings is the candlestick at this level, right? Now I can mark the body of this candlestick. I'll prefer to go with the highest, the candlestick which shoot above, right? Which has the highest high, or which high is topping, or which has the extremity, right? Do not allow this English to confuse you. It means the peak. This is the peak. Let's remove this rectangular tool. Let's zoom in so I can see the concept right here. You can see the eye of this candle right here goes above this highs and this high. So this is why I'm choosing this candle highs and lows to mark my demand and supply. But in this zone right here, it is acting as a supply, because remember, based on the concept of resistance, supply, traders are looking out what? To short, to sell at that level. But that doesn't give a guarantee that whenever price gets to this level, price will always sell. You can see right here, price sold here to the downside, sold to the downside. Price is breaking out right now. So if you ask me, mentor, coach, the trade we took on the USD pair against the switch, which we went for a long, remember the keyword long. What long means? Long means to what? To look out for bullish direction, right? Now, if you ask me, mentor, why do we go for a long setup right there despite price was bouncing through a supply? The answer is we broke out of this supply level, and this supply is now proving as a potential demand. So we are trying to what? To accumulate to long at a demand, right? Now let's get back right here. Now let's mark this body right here as our supply zone and mark the highs all the way down. You can see that. You can see now. This is what I have. Now what I have right here is, I know this supply level right here is a short-term interest. When compared to these red zones right here, these zones right here is more powerful than this level. This level right here, the black, is an intermediate level. This level is more powerful than this level. Now what this means is, if I'm looking out for a long entry at this zone, now the question is, where should I put my TP? My TP should act at the intermediate, because the intermediate structure has higher probability to do what? To reject price all the way down, because price is coming from a what? A short-term trend or a minor structure. Take note, another name for short-term trend is minor trend. Another name for short-term trend is what? Minor trend. Now I'll repeat myself again because I want you guys to understand this concept. We have the long-term trend, long-term trend, or the what? Major trend, keep note of that. And the trend, and the next one is what? We have the what? Intermediate, right? Intermediate or speculative trend, and the next one is what? We have the short-term trend, right? Or what? Or the minor trend, Take note of this right here, right? Now, in the case of the long-term trend, these are trend that what? That it's above what? Trend which are above 12-month calendar period. This is more than 12 months, right? 12 months. And the intermediate is what? Within what? Within 12 months, right? Within 12 months. Take note of that. And the short-term trend is what? Within what? Within 3 months. Within 3 months. Now, the question is, if the shortest distance based on trend duration is 3 months, then imagine why traders trade 5 minutes, 1 minute, 15 minutes, and 1 hour chart. You can see that if the shortest term duration is 3 months, now imagine, think about it, why traders should trade 1 minute, 5 minutes, and 15 minute charts. Traders can now trade 1 second chart, even 5 second chart. This was made possible due to the arrival of the internet, advancement in technology, accessibility to technological devices. Back in the days during the time of the grandfathers of the investment people who trade for banks, for insurance, for big organization, during those times, there weren't advancements in technological devices at that stage. No, there wasn't like 5 minutes, 15 minutes then. The primary time frame then was day chart, and the lowest time frame you could go that time is the day chart, which is the short-term trend, and the weekly chart is what is the speculative, the intermediate. So during that time, most of those traders trade the weekly chart, and then the monthly is for the investors, right? So now, based on the accessibility to internet, technological devices, improvement in technology every day, people can now go lower to 5 minutes, 5 seconds, and 10 seconds. That is crazy, right? Now, so you need to understand everything right here. Now, if you are looking out for a long entry right here now, one of the ways you can now decide your TP zone is, okay, I have to look out for the next what? For the next intermediate or the major structure. So this is why you see me when I hold trade for days, for weeks, sometimes even for months, because I understand the concept of trend duration. I understand the concept of trend duration. So the concept of trend duration means if I can see a strong, long setup at a major structure, there's a higher probability such setup could lead us to another test of the next major structure. So that's why you see sometimes when I take a trade, I tell you I'm going for months, I'm going for weeks. It's based on what I can see on the higher time frame. When you guys are targeting this level, I'm targeting this level, or targeting this level, or targeting this level. So that is the difference, because I understand the concept of trend duration. Sometimes when I tell traders I'm seeing a trade, they say, what? You're seeing the trade for days, for weeks? Yes, because I understand the circle of trend duration. So if I were you right here now, the best zone to place my stop or my TP would be right there and not at this level. It's at this zone, but that doesn't mean whenever the price approach this level right there, I shouldn't be careful. Of course, I will be careful if price is approaching this level. This means I have to trail more profit. Because this level could lead to a bounce to the downside. And most of the time, whenever we have a bounce from this type of structure right there, the market could tap in right there and then still continue the upward rally. You need to understand market can't just move in a straight line to achieve its objective. No, there has to be what? Short term inside the intermediate. Because from this level right here to this level, from 30th of September all the way, price could go up for 3 months. That is short term. So inside the short term trend, we are still going to have retracement, all the way up. You can see that? So price won't go in a straight line. So in the next class, we are going to proceed with how we construct our supply, demand, resistance, and support, so that you can understand the concept. So that whenever people tell you support and resistance is a weak system, you understand that, or you know that these people don't have the in-depth understanding of support and resistance. Support and resistance is one of the first, the basic, the most used concept by the grandfathers of technical analysis, and they were successful. Until now, support and resistance is still reliable. Only that most traders nowadays, they look out for holy grail system. They watch out for holy grail system. They want the simple way. And nothing like the simple way. If you want to make it in trading, you have to pay the price, right? The bigger you want to make it right here, the bigger challenges you have to solve, right? The bigger the puzzle, right? So thank you to traders. We continue this in the next class. Do we have questions? In the next 6 minutes, we put an end to this class. Do we have questions? If you are watching this video from my YouTube channel, from the Facebook, from TikTok, wherever you are watching from, thank you. Right, you can put your comment down right there. If you're in the live class, you can ask yourself. For those who want to join us in our VIP mentorship programs, use the link in the description of this video or the link in our bio. Right, thank you. And there is Accommodation for the physical class student. If you are interested in the physical mentorship programs, accommodation is now available. And if you prefer the online mentorship programs, you can use the link in the bio or the link in the description of this video. For accommodation with physical mentorship programs, as well, you can contact us through the link in our bio. So do we have question? 5 minutes to go. Question?
Just a quick one, despite that it's not what we discussed today.
Yes.
It's about setting up stop loss and take profit. What happens, for instance, if maybe you set your stop loss and your take profit, and the price did not reach the level you set your take profit, what happened? Do you understand what I said?
If the market doesn't hit your TP, should you close your position or you let the market to hit it? Is that the question?
Yes.
You know, when it comes to trading, there is no rigid rule that says this must happen or this shouldn't happen. That's why you have to be flexible as a trader. You have to be open-minded, open to new innovations. The market can decide to move up and move down whenever it wants to. And the market can decide not to get to your key levels or your demand or your supply. Your obligation as a trader is just to listen to what the market is telling you and trade what the market presents. Trade what you see and not what you hope or think or you wish. So if the market doesn't hit your TP and is turning backward, trail your profit or close your trade. All right?
Okay.
So there is no any perfect system or holy grail system that says your TP has to be hit. Your stop loss has no, nothing like that. Right? There's room for innovation. Sometimes you have to break rules. Sometimes I break rules. And sometimes I stick to rules. So that is one of your obligation, your responsibility as a trader. You have to be open-minded. Right? When the market is not moving in direction of your anticipation or based on what you wish, you have to do what? You act. If the market is moving in direction of your anticipation, you hold on to it. Right? So the market is the master of all. The market dictates to us as a trader. Right? The market is our master. Whatever the market tells us, we have to do it. If you do not obey the market will teach you a lesson. The market is always right there to teach you and doesn't care, it doesn't show any emotion. Right? Thank you. So do you have any questions?
Okay.
More questions? I can see someone in the class, Pius. Pius, are you still right there? Pius, you can unmute your mic if you are still right there, Pius. Pius, are you still right there? All right, do we have any question in the class? Question. Okay, based on the update on the USD paired against the Swiss, the bullish setup is still active and our stop still goes below based on my decision, based on the way I trade. I'm still targeting the 4 to 1 ratio the way up. So we've traded some of our entries. So for those who want to make an entry based on this setup right here, you have to reduce your position size. If you are an undercapitalized trader, you can see the stop loss is wide. And if you want to have a tight stop loss, place your stop loss below yesterday candlestick. Today, this is yesterday candlestick. This is Tuesday bar, but a new day has formed in the market. I told you, new day always forms in the market by 10 p.m. right? And it's the trading market day closed by 10 p.m. and instantly open for another new day exactly that 10 p.m. right? Whenever there is time change or during time change, it will be 1 hour ahead or 1 hour lesser, right? So that is it. So a new day has opened and currently right now we are on Wednesday in the market. But based on our normal timing, we are seeing in Tuesday my time zone GMT +1, right? Thank you, traders. I will see you in the next one. And then please, traders, I will send a link right now in the Telegram group. Please, you can leave a review on our Google business page to help other traders who are trying to locate us on the Google map. Thank you, guys. I will see you in the next one. We should have a class on Thursday and Friday, right? Thursday and Friday, yes. We have a class, right? And those who have a class tomorrow, attend your class. So USD switch is still active. Manage your risk. Those who are in profit today based on the trading signals, trade your profit. And remember, we have an upcoming news on Thursday. CPI, check that out, right? Thank you. So we have the core CPI and unemployment claims, right? You have to be very careful whatever you are doing on USD. You can see it goes across all USD. I'll see you in the next one, right? I wish you a safe night rest. Thank you.